following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Well, as I said yesterday, this is about the most dangerous market that we've seen since May 5th of 2008, when all of the stocks and the broker-dealers and housing community and banks all decided to double top on half the volume. And I'd never seen anything quite that big before. But just overall, in fact, we don't have it in a single sector. This is one of these things where it's not a contagion. It's just literally everywhere I look, we've had highs. And I'd say 80% of them have been on significantly lighter volume. They've broken out. They've come right back into their trading range. That was part of it. We saw options pretty much through the last since Wednesday, point to significantly lower prices. That has not changed. It's come up a little, but it hadn't come that much. I think we were talking last week that we could see 2320 is kind of what I was looking for. Maybe we just hit that for a second and then rally. It's not uncommon to see Friday mornings come in and see the low of the week in an expiration day and then see a run kind of into Friday. They have a tendency to push it down a lot and then see the reversal on options expiration. We'll see how this goes. If we continue to sell as hard as I suspect we can, again, I was talking about how everybody was on one side of the market, and that is never good. We also talked about how the summation index had continued down, why the market had continued up. A big sign of the breadth continuing to erode almost on a daily basis. Again, was looking for somewhere around 5 billion shares as we made new highs. We came in with about 3.5 billion shares on the New York Consolidated Tape. If you looked at the total market volume, it didn't, in dollars, it didn't show anything. And it just about everything you look at said that we had a very, very weak market. Nothing out there except a handful of tech stocks, which everybody was piling in. I also brought up one of the best indicators that there is in the market is looking at the options on Apple. That we see Apple down at $4 today is even more than I thought that we saw coming into this. I thought there was a good chance, and it still is, that we expire at 152.50. That's just $1 higher, $1.25 higher than we are at right now. But one of the things that happens, 80% of options expiration are positive. And you have to have a fairly compelling reason to not do that. And just everything I was looking at was there. And so you continue to see a market that's had way missed price options, mostly on the side of there just can't be anything that moves this market down lower. And what did we have with Amazon last fall? A few of the other ones, we've brought it up. I pointed out Priceline looked like it could drop fairly extensively. All these stocks, man, everybody was all over them. And what we saw the last few days was a huge short squeeze on no volume in many of these stocks. I've had to write a few of these through, but I have options going out into the third week of June. So we'll see that. I actually added a little bit to some lottery tickets yesterday, and just sheer luck. I'm not going to say it was any great thinking on my part, just that the option stuff was horribly mispriced. I was buying nickel options that are now trading for 55 cents. So, you know, a 10 for 1 day out here can make you healthy very quickly. I didn't have enough cash that I added to that position. But I'm having a good day. I cannot lie. And of course, a lot of people talking about volume. And I brought this up a few times as we get ready to test the low of the day in the S&P cash. 2368 right now. We're just about half a point higher. I think we're going to go and break it. Again, 2320 would be where I'd pull the plug unless we started being attacked by aliens. I don't mean illegal aliens. I mean aliens from outer space. But could we see that? I think for a second we could. Is that a projection? No. I was looking at a down day of about 40 points today in my newsletter this morning. That's kind of what I was looking for today. We're at what? We're off 33 points. So that's about another 7 points. 2361 was kind of where my target, what first target for today was on the gap down. As I said yesterday, what happens generally at market tops, and I'm not guaranteeing that there's some kind of long-term market top. I do think that there is a high probability that it is, and by top I mean rest of the summer. Could we continue selling off? I think the answer is yes. Volume is not all that exciting, 1.9 billion shares, but I've said this before, and it happened back when we were buying the bottom, whatever it was, 786 on the S&P cash. What was that, March of 2003 or 4? I think it was March of 2003. One of the gentlemen I spent a lot of time paying attention to, Tim Ord, talked about don't get real excited about volume coming in. He said everybody will hate this bottom. They will expect for it to not turn into anything. And you won't see volume until everybody knows that the bottom is in. And that's pretty much what happened. We went up about 250 points. I think it was about 1050 on the S&P cash before the volume actually started picking up. And his corollary on the downside was that too. No one will believe that you had a high. What you'll do is you'll gap down, generally. You'll do so, and there won't be a lot of juice. And everybody will just expect that someone's going to buy the market, it'll go higher. And no one does. And it kind of just, there's kind of a waterfall effect that happens for a little while. Then everybody finally wakes up. And then they hope that the market bounces to go higher so they can get out. So at this moment, I'm going to sit on my hands as we're getting ready to test the low of the day. We'll talk more about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
I don't know why they're playing my history repeating tick. I always play my own history repeating tick. I don't know. They're getting a little in front of me. I was just going to conclude out here that do not be surprised to see light volume for a couple of days. We have broken through the low of the day. And, of course, before we can actually play the history thing, we need to play one thing for the Bears. They haven't heard it for a while. For the Bears.
Dive, dive, dive.
Yes, dive, dive, dive. We haven't heard that in the den a long time.
Then it's all just a little bit of history repeating.
What do we have going on this day in 1994? The Federal Reserve raised interest rates by 0.5 percentage point, believing that this hike, the fourth in 3 months, is the last. Analysts turned bullish on bonds, and the price on the 5-year Treasury note shoots up by 20.22%, one of the biggest jumps in a year. The Fed goes on to jack up rates by another 1.25% by the end of the year, and bonds have their worst year since 1967. On this day in 1994. Don't know him. Sounds like a tractor company. Somebody's putting something in the den. I don't spend a lot of time looking at what other people say. I kind of try to tend to my own knitting. A lot of people come up with names of folks that I'm supposed to know. I don't know a lot of them. Kind of feel like those horrible things I get from Facebook. I'm not on Facebook. I got an account, parked it. Never did one day on it. But they always send me things. Do you know so-and-so? That's got to be the most annoying thing that I've ever had, because most of the time I don't know them. And when I do know them, I'm wondering how they know I know them. I'm not a big fan of Facebook. It just seems, I don't know. It just, a lot of the people, maybe it was the early people on Facebook, that was such incredible narcissists that said that I have so many friends. Well, no friends today out here on Facebook. Down, not huge volume out here. Second gap takes you to about 144. I wouldn't be surprised to see this pin at 145 today. Didn't you like that segue? That was about one of the slickest ones I've done in a long time. Anyway, we have pierced the lows of the day. We're going to look at some of the bigger movers out here. I also have and want to look at some of the 52-week highs to see how many reversals we had. Harmony had, I think, some earnings or something out last night. Little gap up here today. May just be because of gold, but I saw that one. At least in the morning, it was one of the few stocks that was up. Last price is $2.33. Fairly decent volume on a day where everything else is headed south. Another one that did very well was Jack in the Box, the hamburger stocks. Looking fairly strong, but again, we're going to see kind of the same thing we've talked about over the last few days. And about 80% of the stocks are either busting up to previous resistance, even with volume, and then giving it up. And that's what we had in Jack in the Box today. There's about 112, 113 area has been hit a couple of times. The last time was February 13th, not with much volume, about 500,000 shares. We had 10 times that much volume today and could not hold that high. Things still stink in retail, and I don't think there's anything new. We've talked about this the last 4 days out here from Dick's Sporting Goods and others. This is just the bottomless pit of despair. I wonder how many people got that Princess Bride reference. I'm going to have to see if there aren't some great clips for that. The bottomless pit of despair. Anyway, huge volume, blowout. I don't know how many years we can go back, see if there's anything out here. You had May 22nd of 2014, $9.25. So you got that. You got a couple of lows at about $8.40. $10 should hold for a little while. But I don't know if there's anything that can stop these mall retailers from going BK unless we have a really horrible fall with lots of snow and the kids decide to go back to the malls. But everybody I know is still playing games and hanging out in their parents' basements. They're not buying cars, so they don't get jobs, so they're not hanging out in the malls. And I don't know if that's going to change anything. Yesterday, I had a phone call, not a phone call. I had a question, and I missed it. I wanted to go back. I'll look at IWM here in a second. I had a question by John in Philadelphia about whether or not Apple can sell iPhones at $1,000, and I don't think I answered it. I thought about it, and then, like many things, my mind just kind of wandered away for a little while. And, when you're bearish, you're like that. Anyway, I think I talked about that, but the question is it going to matter? And probably on the margins it will, because 85% of their phones are sold with some finance plan on a monthly basis. So over a 2-year contract at $200, you're basically telling somebody that they're going to have to pay an extra $10 a month. And a lot of people are so enamored. Will they still buy it? It will. To me, that's not the question if they're going to spend the extra $150 or $200 on the phone. I think 85% of the people will. It won't be the iPhone is a status symbol. They may not have health care. They may not be able to afford a car. They may be destitute and living under a bridge. But by God, they're going to have an Apple. And we can't ask them to spend that money on anything else. They get whatever from the government they get free is what they get. Doesn't matter whether they have a $1,200 phone in their pocket. Just my political editorial there. But what do we do see in Apple is the status symbol, and I don't think a lot of people are going to do it. Again, the biggest problem is margin. I'll tell you what Wall Street will run from yelling and screaming, and that is if those 65 to 63% margins that they've been turning somehow kind of disappear. They've been a little bit light on them for a while. But there's one more big indicator in Apple that I don't think anybody's talked about, and I've brought it up for a while, and that is the big building. I've heard the theory, and it kind of went from this early on. I think I was 20. I heard first of it, and that is a 45-year-old guy buys a Corvette, look for him to go bankrupt in 2 months. A company is growing like a weed, decides to buy a building instead of actually just rent it, and the market kind of pulls back for whatever they have. The rent's far too much. It crushes them, and they go out of business. Apple has bought a $1.5 billion flying saucer, and I don't know if that's like 10 times the equivalent of a 45-year-old guy finally buying a Corvette and a building for his business, but it just seems like so many times that you see a lot of people throw a lot of cash right before everything kind of turns down on them. Apple's got plenty of cash, so it's not going to be out of business. But will investors start thinking, well, maybe that money doesn't get repatriated and margins are falling? We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll look at a few more. I just wanted to bring one other thing up because I thought about it, but one of the best books ever written about trading has very little to do with actual trading. But the experience of a man through many years. That's Jesse Livermore's remnants of a stock operator. But there's a great part in either in that book or one of the other ones about him, about going, this is like 1905 or 1908 or 1910 or something. And back then, the tech stocks were railroad stocks. And of course, the Standard Oil was getting broke up. I think in 1905 or 7, the other railroads had been broken up with the Antitrust Act, and everybody was all over them. But Jesse, known for being a big short guy, short in the market, actually over his lifetime, other than 1929, made more money being long. He was known quite as the big manipulator, but he talked to his thinly veiled biographer, Edwin Lefevre, in the book about going to 2 different train companies and talking to the CEOs about investing in the company. He walked in one place, and the boss and the CEO of the company had everybody basically using old envelopes that came to them with anything as scrap paper for notes. There wasn't real nice note paper with their logo on the head. And he had a 1-page mimeographed paper for the prospectus. Then he went to the another one, and there was a guy that had a 20-page glossy covered thing looking like a magazine, and everybody had nice little expensive pins on their desks and notepads with their name with the name embossed on them. And he went back to the first one and invested in it. He said, you know what? Probably the best decision I ever made. Apparently that stock went to the moon, and the guy that spent money on everything continued to spend money on everything. And ostentation stuff, man, it just has a high correlation. So when I look at Apple and I see that $1.5 billion UFO out there, it always makes me wonder that it just seems like people buy the Corvette at the exact wrong time and build a new building at the exact wrong time. And who knows? We'll see how that works out. Apple still has a lot of cash, so I'm not saying they're going out of business. I think, we've got 2 gaps out here, 125, and we've talked about this thing coming back to that level, and just how wonderfully stocks have come back to these double gaps over time. So I'm always actually looking up for a better one. And again, on Apple, you've got your real big first close below the 3x3 displaced moving average. What you would like is this thing to go up against it one more time, because everybody's going to want to buy it. And the next close above, and then the next close below. That close below is the signal to finally pull the trigger. You could get back down to that 125 level. I think at the end of the summer, I'm not expecting at this. I'm not forecasting Category 5 hurricane, but I think we could get a 3 or a 4 by the end of the summer. Let's look at some other ones. BB, another mall store that reported, I think either this morning or earlier. And again, we're talking real end of the world kind of stuff. This thing's back down to its previous lows. You can always email me, by the way, at path@tfnn.com. Okay. Down, heavy volumes, going to pretty much blow away this April 21st low in BB stores. Like a young female store, if I'm not forgetting. A lot of earrings and that kind of stuff when I've been in malls. Kind of tough to know, not a huge volume stock out here. But again, I don't see anything that changes the trajectory of these mall stores. I mean, this thing was a $90 stock in March 14th of 2012. And that was when everything was horrible. Now with a beautiful economy, this thing is, pressing $3. So we'll look at that. Question about why Apple is down so much today, thinking it probably should do a little bit better. And we've talked a little bit about this, but Qualcomm and them are in a food fight. Food fight! Qualcomm is saying that Apple is making up a ton of stuff to try to beat them up for better prices. We've talked about this also with Apple, and that is if you're in the food chain for Apple or if you're in the food chain for Walmart, you're going to be constantly beaten about the head and shoulders for better pricing. And a lot of people, in fact, Qualcomm's saying for hook or crook, that Apple just glommed on to the big story of the extortion racket over in China. And there may be something to this. Again, we talked about Qualcomm getting extorted in China for quite a while, and why everybody keeps telling me why China is the land of milk and honey. Very few have done anything but come out of there with at least half their arm left. So always get their hands caught in the cookie jar, and the Chinese like to take it all the way up to the elbow. But again, not a whole lot going on here with Qualcomm. Actually, just a little doji out here today. But a great deal of that discussion is gotten rather vitriolic, and it certainly hurt Apple a lot more today than it hurt Qualcomm. But again, even several days ago, even last Wednesday, the options were looking absolutely horrible for Apple. Let's see if we have anything else out here. Well, everybody knows that there's nothing better than a cereal malt beverage along with something else, and that is a wonderful burger. And Red Robin had blowout earnings. Well, I don't know if you can say anything more about that. They're one of these for every 8 other stocks. But Red Robin Gourmet Burgers is blown through its March 4th, 2016 high, done so with 18 times the volume, something like this. Again, I wouldn't be buying this thing, and you're probably going to get a nice pullback. But if these guys could get back to $60, maybe end of the summer on light volume, this may be a very nice restaurant if you're in that part of the sector. They've always moved too slowly for me, so I kind of wander off. Again, my short attention span theater. You can give me a call at 877-927-6648. You can email me at path@tfnn. Question in the den is Kay from Clearwater. Steve states that Apple is going to bring back the money. However, they only pay 0.00005% in Ireland. They can take a loan against it. Why bring it back? What are your thoughts? We'll talk about this when we come back, too. But it's actually broader. All companies with this money that can come back. Anyway, we'll talk about this in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a question in the den, and that is, what do I know or learn from Google's conference going on today? I don't think that there's a whole lot. In fact, this same gentleman called me a couple of days ago and asked me how I heard about something. And I said, well, I've got some 200 RSS feeds, so I can't even remember where it came over the transom of what I heard this thing. But there's not a lot going on in Google. But one of the RSS feeds that I go and look at is a thing called, now I've got to find it here. It's something called, what is it? Search Engine Land. That's the name of it. And the guy that runs the site, he's a pretty smart guy, but all he does is write about search and Google and how that affects the whole industry and how the industry as a whole should look at Google. So he has a lot of posts each day. I just don't see much in that part of the business that changes that much. To me, the whole future of Google right now is whether or not they push their machine learning technology. Going back to Apple, remember when Apple owned machine learning? They had Siri. It would answer the phone. What'd they do with that? I mean, talk about biblical parables with putting your light underneath a bucket. Wasn't that it? Well, I went so many times now I'm starting to doubt myself anywhere. Don't hide your bright light right under the bushel basket. I call it pail. That's the same thing. Anyway, Google right now has a significant lead. They are doing some very interesting stuff that I will be covering in a webinar probably next month. It depends on how quick I get this together. But I've been working on this one for to get to this point, over a year. That's why I haven't been doing much in the way of webinars. To me, I wanted something for my next webinar that really moved the bar, and not just a little and not incrementally, but massively. So this is probably going to be the biggest webinar and probably the most informative on a variety of fronts, both for traders and investors in and around machine learning. But I'm still trying to put the whole thing together because it's not just like 30 minutes and done. It's probably going to be a bunch of 30-minute things over time. But we'll discuss that more in the near future. But to me, right now, Google has that lead, took it away from Apple. Apple just kind of didn't know what to do with Siri and kind of let it twist on the vine and didn't push forward that. I think mostly because they looked at Google and Amazon and Microsoft and Salesforce and said, hey, these guys have something to sell on the back end. We really don't have as much to sell on the back end. We're not going to get into cloud services in any way. And Apple dropped the ball on it. Google has it right now, and I can get into the reasons why, but it'd take an hour. I've got to figure out a way to distill that down to about 5 minutes. Some people say that you ask a programmer what time is it, and they'll tell you how to build a watch. I know I'm guilty of that sometimes. But Google has that lead, and to me, their future, I think the future is pretty much set in what they have in search. The real future for them is what they can do and build in the Amazon Web Services, in Google Web Services. And they do have the best product. And there was an announcement about 2 weeks ago that made it even better. But right now, for at least me, the best machine learning for the things that I'm working on are both from Google and Microsoft. But this is a business that's moving just about as fast as the computer industry was in 1982. Every week there's something new. Everything week new, there's something faster. NVIDIA is blowing up because, of course, its GPUs are being used in machine language. In fact, let's take a look at NVIDIA here. NVDA. I also have an email and something else, a couple of emails to get to. So we'll do that. Oh, we were talking about Apple. Good thing that let me get back to that in just a second. Like I said, I'm kind of all over the place today. NVIDIA down, volume is not all that exciting. These guys are going to have a ton of competition in the next year. I've covered it in the Tech Insider. And, is this a big deal coming off like this? It isn't. But by in summer, we're going to find out whether NVIDIA can hold the high ground in this GPU accelerated machine learning business. Anyway, huge volume off the bottom. You'd love for this thing to come back on light volume to 105, and you still have that possibility. I'm just wondering what comes along to people that are really after this business, because NVIDIA is really in the video display business, and they kind of backed into this thing that just happened to be a pot of gold for them. The question is how many other people like Intel, like Google, can come in there and steal all of their thunder, just like they stole the thunder from Apple. So when we talk about Apple again, Steve states Apple is going to bring back the money. However, they only pay so much in Ireland. They can take a loan against it. Why bring it back? There is a thing called, it's not exchange. It's actually called an exchange rate for what you move around in the various countries. And there is a huge limit to what they can actually bring back without getting the same taxes. So the idea that they can just have a huge loan and bring it all back is untrue. Can they bring enough of it back each year? Well, that gets to be a huge argument between the two governments, because before they can bring it back tax-free, they have to get a determination from the IRS that it is tax-free and that they've paid in Ireland. And there is some kind of new agreement. I don't know if it's 2 years old or 3 years old, where there's a very lower limit for most companies, and they would not hit it. But Apple would certainly be one that hit that limit. Therefore, everything above that may be subject to 38% taxes. So can they bring back enough money where Apple will be okay? Again, I'm not shorting Apple. They would really have to screw up. There's a lot of other companies that are much lower hanging fruit. I'm just saying, could that come back to 125? And I think the answer is kind of yes. So Just my thought out there is that there's a lot more to bringing back cash today than there was in the past. And it probably wouldn't, I'd say 8 out of 10 tech companies are not going to run into this. But if you're Apple or if you're some of these other companies, there will be taxes if you bring enough of it over. So does that mean that it's going to take them 20 years to get that cash here out of Ireland? That's tough, but there is a limit. I'll try to research that, talk more about it another day. Thanks, Kay, Clearwater. We've got a few more. In fact, some questions in the den before we get into the show.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet, this puzzle can be solved in 20 moves. Knowing the right move makes all the difference in the world, and on Wednesday, May 17th at 5:30 p.m., I'll share with you the 5 essential patterns for timing the market so that you can make the right moves and become a better trader and investor. A few weeks back, I showed you how to spot a bear market with 2 moves that the market always makes, and on Wednesday, I'll unlock the 5 best moves for timing any market for any time frame. To gain access to this extraordinary 1-hour workshop, test drive my newsletter service, Mastering Probability, for the next 30 days for free. Just visit the homepage at TFNN.com and click on the link, 5 Essential Patterns for Timing the Market, and you'll be able to attend live as well as review this workshop anytime during the next 30 days. I'm looking forward to helping you solve the puzzle of the markets, and I'll see you on Wednesday, May 17th. TFNN.com. We've got your back.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Anyway, got a lot to get in here in the last few minutes of the day. I can move something around. Something got stuck here. We'll get rid of it there. We got a ton of emails out here, people. Question in the den. Well, man, let's get to the emails. Maybe I'll get to all of these questions. Okay. Question from about U.S. Steel. Got out of my 27 puts May 19th and rolled into the July 16th 16 puts. How does that look? And that's for U.S. Steel. Man, if this thing hit 1568, I'd be taking my cash. I think that's where this thing's going. You've got a lot of volume, but my guess is that you're going to have fairly decent support at that level. So we'll take a look at that. In the den, we had a question during the break about what NVIDIA does. And they have a thing called a CUDA library, C-U-D-A. And that library allows programmers to make programs for machine learning and for video production. And for video production, if you're making YouTube videos, it can speed up 10, 20, 50, 100 times, depending on how fast and how expensive a GPU you have. That's a video card, by the way, from NVIDIA. How expensive? In fact, they make $2,000 ones called the Titan. A lot of people have multiple ones in the Titan. But the library allows the programmers to use many of those in one computer. So if you're doing a lot of video production and you need video compressed real quick or edited, you can do that. But machine learning is really where this business has really picked up. And the same thing. If you're using machine learning, it used to be 8 months of CPU time could be moved into 1 day. And now it's kind of like 2.5 years can be moved into 1 day. So these things are absolutely necessary if you're in machine learning and you have any kind of big problem whatsoever. But if you just NVIDIA CUDA, just Google that, you'll see the libraries out there. But my thought is in the next 6 months, you're going to see probably 4 different companies have libraries and hardware to directly compete with NVIDIA. And that is unclear. NVIDIA, like Apple, when you make the first product, you basically set and are on the high ground and can defend it if you do it well. It may be a lot harder for NVIDIA to hold the high ground in this than Apple with their iPhones. Took a long time, about 3 years for everything to really get clicking or 4 years with Android, but eventually did. And by 2012, they beat them, and now the Android has 85% of the market, but still only makes about 10% of the money off that. Apple's still making 90%. So you got to look at that come this fall and see how both the margins and the rest of that comes out. Again, a lot of this stuff would be very interesting on a pullback. These things have just gotten wildly bloated. We're off 36 points in the S&P cash. As I said this morning, I was looking for this thing to come down to about 40 points. And actually, we hit that 259.52 is the low of the day. I think that's probably where we go out at the close today, probably really close. Maybe some sideways action or a dip tomorrow. Look Friday morning, maybe a viable low, maybe early morning. Anyway, I'm looking for lower prices. So when you can, not when you have to. We'll see you tomorrow. Think that time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.